and we have a full and rather prestigious panel here today. And being a television journalist, I would very much like this to be a conversation, an interesting analysis on what the challenges are, what the real concrete, and I use that word particularly, the real concrete issues that need to be addressed when we talk about infrastructure here in Africa, but also some of the things that really don't cost any money. There's no financial angle at all, just the political will or the kind of decisions that need to be taken to really catalyze, jumpstart, leapfrog, whatever word you want to know. So I think let's pose the first question to the Prime Minister. Is there enough private investment when it comes to infrastructure in Africa? There's not. It's minuscule, isn't it?
It is. In some sectors, it's significant, particularly in cellular telephones, but everywhere else, it's minuscule. And I'm not surprised, because the private sector can take risks up to a certain limit, and they need returns, sizable returns. Infrastructure is a high-risk business, and therefore they need high returns. So it is very unlikely that the infrastructure gap in Africa is going to be filled by the private sector. I don't think it will happen. We've been waiting for it to happen for 30 years. We will wait another 30 years before the gap is filled. Public sector has to come in and fill the gaps that cannot be filled by the private sector.
I would like to go to I was going to suggest coming to you, Mr. Brown, but I think let's go to the private sector and ask what do they want from government? Ahmed?
Yes, thank you. Thank you, Robin. I think the first thing we would want is a dialogue, and I think that's well underway. It's very important that we talk to each other because we are partners anyway. The government needs, even in publicly financed projects, the government will need the private sector. So we have a key role to play. I think that there is, that's a personal view, I think there is a lot of capital and funds available in the world. My company, manages probably more than $600 billion of assets. So there's a lot of money available. The challenge is how to, if you wish, organize the meeting of the supply and the demand. So organize a pipeline of bankable projects and all the obstacles that go with that, so that money that's looking to invest itself can find its way to the project. And there are two issues there. Something came out of our breakfast this morning on infrastructure. If you think about the private capital, you've got two buckets. There is capital looking for long-term stable returns. They will be interested in existing infrastructure. And that's most of the private sector. Where there is really something interesting to do is in the new projects, where there is actually a relatively high risk and in the development phase and the execution phase, the early stages. And there is not today a clear answer from the private sector to deal with that. What we need is a way to de-risk that whole system, and that came up very strongly this morning, so that private capital looking for high returns can come in and find an exit. What people don't see today is, okay, if I go in and I do this power plant in this country, how do I get out? How do I get my money back after 2 or 3 years, once I've been rewarded for the risks I've taken? And I think that's an area where there's a lot of work going on with multilateral banks, the African Development Banks and others, to think about how we can de-risk and how we can close, if you wish, the perception gap between the perceived risk of investing in infrastructure and the actual risk we all believe, I think, is much lower.
And I think, Wale, I don't know if you want to touch on this, but there's also this disconnect between unrealistic expectations, particularly when we're coming into really the beginning of some of these infrastructure projects we're talking about. A government wants to take the projects, perhaps, that have the biggest sort of capital or commercial potential, and investors want government to take all the risk. There is this sort of disconnect, isn't there, between expectations before we go anywhere?
Yeah, I'd say that as well. So one of the good things is we do require an enabling environment infused with transparency in terms of the terms and conditions, something that's liberalized that enables us to invest the capital and be certain that the capital, we would not have changes in government policies which will affect those investments. Most of the times we have to make up the rules as we go along, and I think Tijan's point regarding having a consistent dialogue is important. The private sector needs to know that they would have a transparent entry into these investments in which we would be able to make our investments without having the risk that concessions will be giving out in secret to other people where we can't ensure we can attract the appropriate investment. I think the key is that we do need to have an environment where the capital can come in from all parts of the world and from different sectors of the world in the most ethical fashion, and it can also exit as well too, which is why the impact of having viable stock exchanges or means of selling off or securitizing these projects after completion to ensure investors get their monies back.
Gordon Brown, what are your experiences in the UK, and what do you think, if any, African countries can learn? That said, I know that a lot of people might be critical of me asking you this question because the UK is a country where the rail does stop, the network does stop if there's a wet leaf on the tracks. So, but I think, what is your experience?
Can I say first of all that I'm delighted to be here in Addis Ababa, and it's been an amazing session of the World Economic Forum, and I want to thank Prime Minister Meles for his hospitality. This has been a truly great event, and I think it's a great event for the reasons that you're talking about in your question. First of all, Africa is moving forward with great new ideas about diversification and about manufacturing. Agro-processing, mineral processing, pharmaceuticals, other forms of manufacturing. I think the background to the debate about infrastructure is not simply meeting the existing needs, but meeting the needs of an economy that is diversifying and is moving into new areas. And then from the experience of the United Kingdom about infrastructure, the needs are huge, the finance is possible, but the risks are high. And so we've got to find a way in which we can bring the public and private sector together for the projects that are the priorities. And the African Union, NEPAD, under Prime Minister Meles' leadership, have listed 51 major projects. We've got to bring the private sector together with the public sector in a way that we can minimize the risk for investors. There is political risk, there is commercial risk, regulatory risk, there's currency risk, of course, a number of risks that have got to be dealt with. Now, I'm very confident that building on our experience in the United Kingdom, where we created public-private partnerships in a new way for the first time 10 years ago, that these problems can be solved. But it needs, therefore, the public and private sector to work together with a common agenda to solve these problems. And then I think you could meet the investment needs, which is about 70 billion a year in infrastructure investment with some speed. But you will need this coming together of public and private sector to look at how we can work effectively together to de-risk a lot of the projects.
Brian Molefe from Transnet, I mean, what's your assessment of that? And more importantly, I think the capital is there, isn't it? It's just how we structure it and how these relationships are created.
Yes, the capital is there. I mean, the World Bank estimates that capital outflows out of Africa in 2011 were about 75 billion US dollars. The pension funds in Africa have in excess of 450 billion in reserves. So the capital is there. The issue of structuring it, people can structure it. And the only problem is, what do we need to do to trap the capital on the continent? And I want to agree with Prime Minister Brown that the development of manufacturing is quite critical. It is already happening, but more needs to happen. Because, for example, if Zambia has copper and South Africa has iron ore, they have no reason to trade with each other unless they produce commodities that they can trade and trap the capital in Africa. So I think that is the next big challenge. And the infrastructure must be built around facilitating intra-African trade to trap capital on the continent and to create jobs on the continent and fight poverty.
Donald Kaberuka, I mean, when we talk about intra-African trade, the recent report saying that red tape, borders, visa issues, all of that, I mean, it's one of the issues that I keep on hearing here at the World Economic Forum that all impacts on doing business, infrastructure projects. From your point of view, how crucial is this intra-African trade, and how do you break down the barriers?
Listen, I think it is not all doom and gloom. I think progress is being made. It is very slow. PM Meles is here. I can see the head of state of Djibouti. We have done a project between Ethiopia and Djibouti. power interconnection, which has cut down the cost of power in Djibouti by 40%, if I'm not wrong. I could cite you many similar projects across the continent. So we have a lot of ground to cover. It is not easy. There are issues to be resolved. But I think comparing Africa today and say 1980, I see a huge difference. Even the numbers of intra-African trade, I think, underestimated. They're probably a bit higher. But if I could come back to this issue of private and public sector, I think that there's a big area of interconnect, a sweet spot, where we can have public investment, private sector investment combining. I'll give you an example. We're doing a power project in Uganda where private sponsors are producing power. But you could not expect them to do the transmission lines. So we came in with public money to do the transmission lines by a grant to the government of Uganda, which enabled this project to be viable with private money and also electricity to be affordable. I can imagine many other examples where we can think of private capital, public money, joining together to have a development solution. So I think progress is being made, especially on connectivity, on broadband. There's much more ground to cover. There are some difficult areas like maritime ports, like urbanization, like rails. But when I look at almost each part of Africa, progress is being made.
The sweet spot for you, Ahmed.
Progress is being made. I agree with that wholeheartedly. But I think that the issue of excluding private sector investment from infrastructure, I think, is not the right paradigm. I think there is a lot of private sector infrastructure that can be done across Africa. We have done certainly around $5 billion worth of infrastructure around Africa, building natural gas pipeline, building power, building railways, building even potentially a refinery soon enough. So the amount of infrastructure that the private sector can build is available. The problem is there aren't enough people to catalyze those projects. You need at least a significant number of people to catalyze. You cannot have 3 or 4 or 5 only who are doing all this, or 6 or 7 or 10 doing this in Africa. But now the challenge of those enterprises is financing, because there is a problem in financing that is taking place around the world right now. European banks are deleveraging. That and the re-rating that is happening across the financial sector in Europe will have a significant impact on Africa. So now the combination that needs to happen is a combination of DFIs, export credit agencies, ECAs, and sovereign wealth fund. This is the combination that needs to happen, bringing in everything together that is there. The issue, there is one point that has been made regarding the private sector can come into existing infrastructure. That I agree wholeheartedly. We have certainly done the railway from Mombasa to Uganda. That is a $400 million investment, and that we took an existing railway and we are upgrading it. But it is the additionalities that can be there regarding building additional pieces of infrastructure, pieces of railway around that can make the investment profitable. But the reason why also new infrastructure can be built is the growth in Africa. Even in a regulated infrastructure environment and regulated fees, the growth that can happen is significant. And that would compensate the regulatory part of it. And we have seen that across a number of deals that we have done where at the end of the day, the amount of consumption that took place is 2 times, 3 times, and 4 times what we originally envisioned. And that can compensate the returns. Yes, the private sector need high returns, but that can be compensated by volumes increases and not necessarily tariff increases, which can be regulated.
I've interviewed some of you in the audience. I speak a lot every week on Marketplace Africa to people about these very issues. And again and again and again, I hear both governments sometimes, but mostly private sector saying, the one thing that is holding back Africa's growth is government regulations. When do you think a a country like Ethiopia, for example, would liberalize the banking sector, the mobile sector?
Before I go to your question, I want to respond to some of the points that have been raised. Now, the World Bank says that there is over $90 billion. There's a gap of over $90 billion in investment in infrastructure. There has been very little infrastructure investment in most of Africa for the past 30 years. There was infrastructure investment in the initial period of colonization, and it's very interesting that you are refurbishing the railway system that was built by the Brits before the Prime Minister was born. And then in the initial years of independence. Since 1980s, the gap in infrastructure investment has gone in the wrong direction. Why? Because since the 1980s, the policy has been the private sector does the infrastructure. Now, why do we need infrastructure? What's the point? We need infrastructure primarily because that's an essential input for manufacturing, for exploiting our natural resources, for agriculture, and so on and so forth. Now, in manufacturing, public sector doesn't have much of a say. In agriculture, the public sector does not have much of a say. In mining, same thing. So enabling the private sector through public investment in infrastructure is not something that Africa is going to discover. If it tries to, it will simply be reinventing the wheel. That's what happened everywhere else. Second point I want to make. When I say much of infrastructure investment in Africa, not all, but much, will have to be public, that doesn't exclude, for example, in the case of a railway, implementation of the project will probably be done by some multinational company. The wagons and locomotives will naturally be manufactured by somebody else, another private sector. The management of the railway system itself might be done by a private company. But the ownership and the risk capital of that railway system, if it comes from the private sector, it will have a number of risks. First, all of you are saying the public sector has to de-risk. In other words, you are saying the public sector shoulders the risks and the private sector reaps the benefits. That's not going to work. Second, your discount rate is understandably high. You want to have a profit rate of what? 20%? The average profit rate in Africa that people expect is about 30%. With a discount rate of 30%, imagine how much infrastructure we will be able to do and how much of the gap we are going to fill. So the idea should not be that the public sector should be out, private sector should be in. We have to do, each one of us have to do what our comparative advantage seems to suggest. Now, the public sector does not have money. And that is limiting investment in infrastructure. But you know, these whiz kids in the financial system, I'm sure they can create instruments. The Prime Minister created one instrument. It's called the IFF. The idea was that he would commit to pay a certain amount of money for, say, 30 years for development aid. And the banks would use that as collateral and give us the money now. Simple idea. Financial engineering. Same type of financial engineering can be made. GM has a big multinational financial institution. This talk about deleveraging and all the rest, there's trillions of dollars of money that does not know what to do. And because it does not know what to do, it's going from one commodity to another commodity and becoming a wrecking ball. Today it's oil, tomorrow it's wheat, the day after tomorrow it's some other paper. We want this capital here to do something tangible. And there's a risk here. And the risk, Don's institution is AAA rated. Mine is junk. So if Don could raise the money and lend it to me, then I'll have the money to invest. And the private sector can come in implementation, can come in manufacturing, and so on and so forth. Now, two issues you raised, telecommunications and finance. We have not liberalized the financial sector in the sense that we have not allowed foreign banks to operate in Ethiopia. Why? Because these giants, Chiam, manage an economy that's many times bigger than mine. These giants can wreck a giant economy such as that of the United Kingdom. Ours is a flimsy boat. They come in, they use instruments that we cannot control, that in most instances we don't even understand. The best of us don't even understand. How are we going to regulate? How are we going to regulate these people? It's not possible. We don't have the capacity now. So what did we do? We allow the private sector in Ethiopia, which is not not infinitely more complex than the public sector, and therefore could easily be monitored and regulated by the public sector. We allow the private banks to operate here, so we have more than 10 private banks here, but not foreign banks. Is this going to be the permanent feature? No. As we grow, as we develop, and as we become more sophisticated in our regulatory capacity, of course we'll liberalize, but not now. And we have lost nothing because of this policy. Telecommunications. Ethiopia, as a country, I think in per capita terms, is investing more in infrastructure than perhaps any other country in Africa, whether it's railways or power or telecommunication. We're doing it by borrowing from banks that are not that good at speculation, mostly Chinese banks. So we have the money, borrowing it, and we want telecommunication in every school, in every village, and we want it cheap, not at 30% discount rate, at 2%, 3% discount rate. That is why we have not yet opened up the telecommunication sector to private investment. Is that going to be the permanent future? No. Once the market failure there is overcome, we move out. There were times when we owned breweries in this country. Now we are privatizing all of our breweries because that's not our business. The private sector can do it excellent and can do an excellent job. We used to own, and we still own some textiles. The only textile factories we own are the ones that we could not privatize because they're not making profit. But we want to privatize this. So it's not, our policy is not designed to keep the private sector at bay. We know that's a dead end. Without the private sector, there is no development. What our policy is based on is make sure that the public sector plays its role so that we will have Asia-type growth. What do I mean by Asia-type growth? Fast, but not just fast, equitable. Both fast and equitable growth. You cannot have fast and equitable growth without a clear division of labor and partnership between the private sector and the public sector.
I feel like I'm a school teacher at school because I think you're all raising your hands.
Well, I think
Wale, just from your point of view, experiences in Nigeria, do you feel governments are too suspicious of what you do?
I think first and foremost, governments, there's a paradigm shift going on in Africa. Governments used to control all the resources and they awarded everything. So the essence of going into political power was to invariably ensure you secured the economic domination of a local economy. That's changed with democracy. There's good governance going on now. Countries are liberalizing. I think the next task was to ensure that governments realize that the private sector is much bigger than they think. And the private sector is not only about foreigners flying in to invest money. The private sector is about creating a local indigenous class who can take the risks that foreign entities or foreign financial institutions will not naturally take by providing the original seed capital to start up, proving that it can work, and then you attract additional investment. So I'll take two very basic examples of two models that have gone on in Nigeria. One was to take the telecom sector. We had 400,000 lines in the year 2000. it costs you $5,000 and a 6-year waiting time to get a phone line. And the government decided to liberalize the telecom sector. They were able to get an international concern to study the market, create appropriate bidding documents. They had the political will to put it on the internet such that anybody in the world, okay, upon payment of a $20 million fee, was entitled to bid. Now I was 30 years old, young, running around doing informal businesses then, and we were able to form a consortium by virtue of the transparency and the fact that there was an appropriate regulator. We formed a consortium, we went into the bid, we started at $20 million, we ended up at $285 million. All monies raised in Nigeria from different aspects of the economy, you know, from the banks, from the insurance companies, the private sector, and we're able to get the license. Nigeria earned $1 billion in fees from those licenses and has 90 million phone lines today. That's one model that works. And the willingness, the political will, the transparency, the strong regulation, I don't think we should be scared of those whiz kids. I don't think we should be scared of those ball breakers. The question is, how do we contain them to ensure that they deliver the investment in the way and manner that we want? I'll take another example. We've built gas pipelines in Nigeria, and we've been able to connect something like probably about 40-50% of the industrial capacity in Nigeria. And we've built 3 systems now in the last 3 years, investing about $500 million. We had to make up those concession rules as we went along, but we had willingness in the government that realized that the National Oil Company had the mandate to do this for 20 years and couldn't do it. And we had to create a new system that said, let's create a public-private sector structure, let's create a framework, and let's do it phase by phase and develop it. And more capital was attracted to it. There's no concession, whether it's a rail or road or anything, that's going to start and finish in a short space of time. There has to be a long-term plan, okay, in which people feed into, and different aspects. If it's appropriately structured, you would be able to create different concessions along the same framework and attract investment from different sectors. Eventually, the foreigners come into it, and when they see it's workable.
Bijan?
Yes, thank you, Robin. Prime Minister Meles and I have known each other for a number of years. He's called us a giant a few times. So I'd like to suggest that we're a gentle giant, even if we're big. Because just 2 or 3 observations. First of all, I think the behavior of a private sector in the past is not necessarily a reliable predictor of how it's going to behave in the future. So I accept the Prime Minister's analysis up to now, but today I go around the world. A big part of my job is talking to investors, my shareholders, listening to them. This year, 3 times, once a hedge fund called me in New York. I was wondering what he wanted to talk about. It's a big shareholder. He said, I love what you're doing in Asia, but what are you doing in Africa? And I told him that if I was not more restrained, I would have given him a kiss because I was so happy. But all my life I wanted an investor to ask me that seriously, as a meaningful business question. And that's great. So there's been a sea change out there. You know, that money is there, sitting there, is ready to come. So we shouldn't necessarily think about what's happened in the past to look into the future. I think there is really a possibility to attract capital here. And on the financial services sector, Prime Minister, I'd just like to describe maybe what we do in some Asian countries. We are number 1 in Indonesia. We have 157,000 employees. That's 157,000 Indonesians. We are number 1 in Malaysia. We have 13,500 employees. We're number 1 in Singapore. We're number 1 in Vietnam. We have 40,000 employees. What do we do in those countries? We collect savings. Okay? Then to help people save and prepare for their retirement, their pension, because of the way the demography is going. It's a very useful thing for the government. But the other side of that is I'm an investor in Vietnamese dong. My liabilities are in Vietnamese dong. So I have a natural appetite for long-term assets in Vietnamese dong. So where do you think the Vietnamese government goes when they want to do a project? They come to me. We hold 30% of the Vietnamese government debt. Okay? Because I have all those funds. So we finance them. We're a force for good. And we're part of their economic strategy. And we help them grow faster. Because we're able to transform those little $10 per month that hundreds of thousands of Vietnamese collect into $1 billion, $2 billion, $3 billion that we can mobilize in a privatization of the telecoms, that we can mobilize to do a toll road. So I would argue that the international financial services sector, you know, is a broad universe, and I accept that some behave the way you described, but there is also a lot of benefit to be derived from developing a proper and deep financial services sector, because that is the only way you can reach a certain level of growth and investment in your economy, and with domestically generated resources. I'm with Jibril. I actually believe, look, I closed a 220 million financing in 1999 in Abidjan to finance a toll bridge in my country, in the Ivory Coast. I got the last 15 billion CFA, you know where? From the Army Pension Fund. Because I was missing the fund, I went to see, that's actually anecdotal, but it's part of why I did well through the coup. Because one of the guys who did the coup was the head of the Army Pension Fund, so he knew me very well. So I went to see him. I said, General, you know, the bridge is almost done. You know, we need 15 billion. And those soldiers, you need to pay their pension. What are you going to do? I'm going to bring all those cash flows, stable, 2030. I convinced him, and he came into the project. So it's just to say that with imagination, there is a lot we can do, even relying on our own means. But for that, the private sector and the public sector need to work hand in hand.
Brian Molefe, imagination?
I think what Prime Minister is warning us about is quite real, in that in the last 30 years we haven't seen a lot of infrastructure development on the continent, despite the fact that there was capital for infrastructure. The difference that we should make going forward is that the bulk of the money that comes to develop infrastructure must not be debt. We must try and avoid debt, because over 95% of infrastructure investments on the continent over the last 30 years was debt, mainly from Washington. If we are not careful, in another 15 to 20 years, we'll be having another HIPIC discussion. And I think that is what the Prime Minister is warning us against. But the private sector and the public sector both have a tendency to fail, and quite spectacular fashion sometimes. The private sector has got market failures that is the burden of the private sector, and the governments also fail. And I think in a lot of infrastructure projects, you actually have elements of both private sector and government failure coming together, converging to make the project quite impossible. Private sector failures like access. In South Africa, it is a very big issue where the majority of the population was excluded from the economy. If you try to give them access and people have got property rights, that is a private sector failure in infrastructure. But government also fails sometimes because of the time it takes to make decisions, to make the correct decisions, and changes in government and interests and things like that. So we need to find a way of bringing the convergence of interest between the private sector and the public sector in such a way that it combines. I mean, what I think we need is some kind of compact between the private sector and the public sector in Africa on development. And I think it has to be underpinned by industrialization.
Gordon Brown?
I was listening to Prime Minister Meles, and I was reminding myself that at the height of the banking crisis, I was talking to the chief executive of one of the banks, and he said to me, "I'm only beginning to understand the risks that I've been taking." And I think that filled me with some despondency and gloom at the time. And Prime Minister Meles is right. The financial sector has not always performed in a way that is in the best interests of individual countries and the world economy. But I would say this: if you look at the challenges that Africa's got to meet, 12% of the population, only 2% of foreign direct investment, only 2% of world trade at the moment, only 12% of trade within the continent is domestic, and one of the reasons is that the infrastructure is simply not fit for purpose for the domestic trade. Now, I believe, and this is to follow the last contribution that has been made, that if the public and private sector could work together more effectively, and if we could lay down better guidelines for the future that dealt with some of the risks, some of which international institutions can help with, some of which domestic governments, some of which the private sector has got to find new ways of dealing with it, then I think we could mobilize sovereign wealth funds. I think Tidjane is talking about the pension and insurance and institutional investors, and then foundations, high net worth individuals. I think there is a ready willingness to look at projects here in Africa in a way that hasn't been done before. And I sense coming out of this week, talking to people who are potential investors, but talking to people who know that these projects have got to be done, there is a new energy about moving from simply talking about design to talking about delivery, there are 51 projects that have been itemized by NEPAD under Prime Minister Meles' leadership, ports, railways, roads, power, infrastructure in terms of IT, and I think you could move these forward pretty quickly. You need to have a constant dialogue between public and private sector. You need to create an organization that has the power to bring partnerships together, and you need to attract funds that, in the absence of governments having the money to spend, could be made available, in my view, and you can deal with these risk questions systematically, one by one. And I would say that one of the huge defects in the African economy, the lack of infrastructure, could be addressed pretty quickly if we could all come together.
Yeah.
Ahmed, probably say something?
Thank you. This is a very interesting debate, of course. But you know, in the bank we do about $2.4 billion of infrastructure every year, both from the private sector window and public sector window. And frankly, my take on this is that all successful economies the world over have combined the best of the private sector and the best of the public sector. That's how it has worked. Now, if you look at, for example, the explosion of telephony, telecommunication, IT in Africa over the last 20 years, it has been essentially driven by the private sector. There's no doubt about that. But there's still a role for the public sector in terms of regulation, ensuring that there is a level playing field. I am convinced that if we do that thing right, the governments that is, Africa is set for leapfrogging the rest of the world in that particular area of connectivity and IT. But the other extreme is railways. This is why I agree with PM Meles. You know, the gentleman sitting on the extreme left is rehabilitating the Mombasa to Uganda railways, and you are financing part of it through our private sector window. But I was very skeptical at the beginning. When the staff brought this to me, I was asking, well, can the private sector do this thing? But eventually they disbanded it in terms of who will do locomotives, who will do engines, who will work on the signaling, on the rolling stocks. They brought in some Brazilian companies. So, okay, we gave the money. But I remain a believer that railways, maritime ports, some of the difficult areas in urbanization, we need plenty of public money. But still, we need intelligent combination of private sector resources and the public sector. Final example, in the energy area. There are many projects like the ones being done in Ethiopia here, where if you want to do it from the international financial institutions, it takes time. And like Tiam, I've known PM Meles for a long time. He can be very impatient. And in this case, he decided to go his own way, and I support him. But there are many other parts of Africa where we've been able to attract private money into actually producing electricity. What they've asked us is, do the transmission lines and ensure the government is doing the right thing in terms of ensuring the national electricity company is solvent and the independent regulators are really independent and the framework is right. So it will have to be case by case, country by country. Some things will have to be more private sector, less public sector. But I think we should combine them, as Gordon Brown says, and I think in this way we can succeed.
I'll get you now.
Yeah, I think...
Sorry, just...
I fully agree that we need to move from the dichotomy of private and public. I think, you know, we all agree almost that it needs a partnership and a combination of both. I think what we need to focus on right now is why Africa now? And I think this is a question that needs to be answered. Resources have been there for the last 50 years. Potential consumers have been there for the last number of years, 80, 90, 100 years. So the question that we need to answer now is why Africa now? And I think if I start a contribution in that direction, I would say that three things have changed in Africa substantially. The first thing that has changed is the governance in Africa. If you look around you today, you'll find that most governments are elected. And those elections have been part of the change in Africa. Those new governments are being accountable. They have to be accountable to people, and they are trying to deliver the best performance. I think that is a fundamental change that took place in Africa over the last 20, 25 years. The second part that is this is part of this why Africa now question, is that this is the last bastion of growth. If you want to think of Europe now, it has its problem, and I think Prime Minister Brown can speak to that. You have Asia and you have Africa. And Africa is, for the next 30, 40 years, one of the bastion of growth that can be delivered in the world. And that is the second. The third part is that the education of a lot of African, myself included, came back, have been well educated, they had exposure in the Western sphere, and they have come back and are having a very positive contribution within the continent. So I think this is how we need to answer this question. I keep being asked a lot of time, why Africa now? It's been there for the last number of years, and this is what the answer, and this is what we need to keep pushing all together regarding pushing investments in Africa.
When we talk about infrastructure, it covers a very wide gamut of issues. When we talk about leapfrogging and the actual choice of what to invest in, there's a suggestion perhaps by Brian that we need to focus on industrialization, quick, fast industrialization, to the detriment perhaps of water sanitation. Is there a choice, and is there a need to leapfrog some of the basic infrastructure necessities to kickstart this industrialization? And I ask you this because Ethiopia is trying to stimulate a manufacturing industry, isn't it?
Yeah. I'll repeat what I said earlier on. Why do we need infrastructure? It's for economic growth and transformation. Infrastructure that does not serve that purpose is meaningless. Now, let me repeat again, I'm not saying the private sector has no role in telecommunications. Owning a cellular phone franchise in Africa is like owning the mint. So why wouldn't the private sector engage there? I have no problem with that. It's possible. I'm not saying that the private sector should not be engaged in any infrastructure activities. I'm saying the infrastructure activities that matter for manufacturing is electricity. Roads, railways, ports. Without manufacturing, you do not transform our economy. So you can have all the best telecommunication in the world. If you can't manufacture a proper shirt to export, you can talk all you want on the phone, you will not transform your economy. So the key is agriculture and the key is manufacturing. On the issues that matter for manufacturing, for example, electricity, while the Nigerians have done a spectacular work on telecommunications, they have not done an equally spectacular job on power, electricity. And even if the private sector were to engage in generation of electricity, and it does, what will be the cost? They have to have their discount rate is steep. They have to have their profits. And who is going to pay for that? It's the manufacturing factory. So which one do I want to support more? The private sector that generates electricity or the private sector that uses electricity? For me, supporting the private sector that uses electricity is more important for transformation than allowing the private sector to generate electricity. And my good friends, Chairman Don, have said we are impatient. Yes, we are impatient. We are impatient because we are in a deep hole. And every minute in that deep hole hurts. And not psychologically, physically, people die. People die of hunger. So we need to move fast. Now, with regards to the factors that have helped Africa move, governments have changed, there have been elections, policies, macro policies, and so on and so forth. That is all true, but to be honest, that's old stuff. It was done in the 80s and 90s. So there's nothing new here. We are maintaining the same thing. We still have our conflicts. We still have our problems in governance. We have moved more aggressively to come up with a common African agenda and to engage the international community with one voice, and that has been a very important factor. And there is this big change globally. The tremendous growth in Asia has been the biggest savior of Africa. And we shouldn't ignore that. Now, if we don't take care, we'll be taken for a ride and dropped when the time comes. If we don't use this window of opportunity to transform our economies, then we'll be lost. And we have to learn from the experience of others. Most of the successful Asian countries, most of the infrastructure investment was not done by the private sector. It was done by the public sector. So let us not dichotomize. Let us, each one of us, do what we are best able to do. I forgot your question, sorry.
I think heads of state are allowed to forget questions. Is that, you're allowed.
You're getting old.
The problem is I also forgot my question. So we're equal, okay. I'm going to actually open it up to the floor because best you ask the questions now. So we've got probably about 10 minutes. So 3 questions if that's okay. Keep the questions short, please. And the answer is relatively brief as well because we want to try and get as much in as possible. So I'm going to go sort of 1, 2, 3, just literally within my eye line. Thank you.
David Creighton from Cordiant. We are a private sector investor in emerging markets, doing a lot in infrastructure and manufacturing. You'll be happy to know that we're about to do something in Ethiopia. The big concern that we have, in particular in Africa, is the crowding out of the private sector by the likes of the sovereign wealth funds, the DFIs, the export agencies. So we're finding that a lot of the deals that we're looking at in Africa are not structured or are not generating a return which are commercial. The deals that we're looking at here are competing against deals in Brazil, in Vietnam, Nicaragua, and so on. So that's a concern. Sorry, it's not a question, it's a statement.
Can you repeat the question, please? Can you repeat the question if you heard it? We didn't hear it.
Sorry, I didn't hear that.
Sorry, can you repeat the question for us? We didn't hear it.
Okay, well, why don't you repeat the question? Because I think it's, do you want to just speak? You made a statement. I'm not quite sure what your question was. So I think it's...
The question is, why aren't you seeing more private sector investment in infrastructure in Africa? The reason is that the private sector is being crowded out by the official agencies. Very simply.
It's the issue again of government regulations, I would say. You, sir? Right here.
Thank you. My name is Dempsey from Duet Group out of London. We raise our funds from financial institutions and invest in private equity investment. We just made the largest private equity investment in Ethiopia. Just listening to every one of you, something came to mind. Basically, we need to channel this funds from Europe and everywhere else into infrastructure projects. And my thinking is, why don't we look at the African development model and repeat that specifically for infrastructure. And I'm thinking about an African infrastructure bank. What are your thoughts on that?
Thoughts on an African infrastructure bank. And you, sir?
Thank you very much. My name is Josephat Moora from KPMG in East Africa. My question relates to the issue of governance that has attracted investment. And in the spirit of very frank discussion that Prime Minister Zenawi has set, maybe Prime Minister Brown could also answer this. Is there a fallacy about this whole issue of democratic processes? Because when you look at Singapore, South Korea, Malaysia, Indonesia, they provided public leadership in the kind of investments we are talking about without necessarily having the democratic processes. And yet we have this great pressure within the continent. In the spirit of this open discussion, can I get some straight answers from you? Thank you.
Okay, let's get some straight answers. Perfect. Should we start with that, actually? Yusuf, I mean, is democracy a myth when it comes to actually stimulating economies like this?
It's not so good when you lose, which I did in the last election. In fact, someone said of me, they quoted the words of Shelley, the poet, the British poet, and they said, I'd lost the art of communication, but not, alas, the gift of speech. And that's what you may feel about some of the political statements that have come out. Look, I think Africa benefits enormously from the democratic accountability that exists in the different countries. And when my friend was saying, why Africa, and gave three very good reasons, and one of them was the democratic accountability of countries, I wanted to add, and I mentioned it to Prime Minister Meles, the growing unity of Africa as well. And I think the NEPAD, which is the creation in many ways of one man, Prime Minister Meles, bringing Africa together for economic development, identifying the projects that are cross-border projects in Africa that need to be done. I think in many ways you're ahead of Europe, you're ahead of America, you're ahead of Asia in identifying what needs to be done. Now the question is, and this was the first point that was made, can we get people to invest in that infrastructure for the future? But you've identified the projects, the ports, the railways, their power transmission, the urban regeneration projects. Now you've got to come together and make sure that happens. And I think the unity that has been expressed through NEPAD is a very good signal of what can be achieved for the future. And just being here this week and coming back to Africa, as I've done on many, many occasions, I see the powerful attraction of this new unity and this willingness to work together that will attract the investment, but will also get things done. I think it's a very important message you're sending out this week.
Yeah, the person wants a straight answer. I think Prime Minister Brown has given one side of that straight answer. I'll give you the other side.
So technically there are two straight answers.
We'll dividing, there is a division of labor. He's the Prime Minister of the UK, so he has a European perspective. My view is that there is no direct relationship between growth, economic growth, and democracy, historically or theoretically. But my view is that democracy is a good thing in and of itself, irrespective of its impact on economic growth. And my view is that in Africa, most of our countries are extremely diverse. That may be the only possibility, the only option of keeping relationships within nations sane. Democracy may be the only viable option for keeping these diverse nations together. So we need to democratize, but not in order to grow. We need to democratize in order to survive as united, sane nations. That's my view. But I don't believe in this bedtime stories of and contrived arguments linking economic growth with democracy. There is no basis for it in history, and in my view, no basis for it in economics, and there is no need to do it. There is no need to have this contrived argument, because the case for democracy can stand and shine on its own. Two points. Is the public sector crowding out the private sector investment in infrastructure investment in Africa? We're talking about $90 billion gap per year of lack of investment. When there is such a huge gap of investment in infrastructure in Africa, how is it possible to imagine crowding out of the private sector? For me, it doesn't appear to be logical. If the public sector was investing tons of money and crowding out the private sector, perhaps. But across the continent, the public sector is not investing in infrastructure. They don't have the money. African Infrastructure Bank, that was an idea that Don had raised many times. Last time we met under the chairmanship of Gordon Brown during the crisis, we wanted to get money under NEPAD for Africa. People were telling us there is no money. We are in crisis, there is no money. His staff gave us some information. I'm sorry, I'm sorry, I'm releasing some information. That's
Straight talking.
But other people knew it. They told us the IMF has tons of gold. It is valued at ridiculous prices. If you were to bring the price of gold a little bit higher, you would have a lot of money available, new money available for investment in Africa. So we use this insider information. And the maximum we got was $6 billion from the IMF, just from revaluing the gold. We could do something similar, but at a higher level, and that could be the capital injection that African Development Bank needs. It's AAA rated. If it gets $1 from the IMF, it can borrow $4 from the market, and it can lend to us at concessional rates. And that would cover some of our shortfalls. Thank you.
Donald Kaberuka?
No, I totally agree with the PM on that one. In fact, rather than public agencies crowding out private money, it is the opposite. I believe that the action of public agencies has crowded in the bit of the private money that has come in. And I can give several examples. But could I, Robin, if you allow, just pick up a small point linked to industrialization? This one thing we have not discussed. When China was industrializing, they realized they cannot have first-class infrastructure across the country. So they chose the model of industrial parks, which means along the coast of China, you have industrial parks in which you can have excellent infrastructure, you could have clusters, you could have skills, and then later you can scale up. It is being done here in Ethiopia. I think at some point, this model will have to look into. It is not possible to have first-class infrastructure everywhere at the same time across the country. But you can choose a model whereby you say, let me begin with a cluster, and I put them in industrial park. There'll be energy, there'll be skills, there'll be IT, and then later we scale it up. This is the only way we're going to be able to attract some of the factories from Asia. And I'm glad what is happening here in Ethiopia is an example of what can be done.
Thank you, Robin. I'd just like to second that very, very strongly, because I'm quite familiar with the Chinese example. And that's exactly what they did. I think often it's useful to think big, but it's good to start small.
Yeah.
So just do something. So the way, I mean, if you talk to Chairman Jin at CIC, he'll tell you the story. They knew what they wanted to do over 20 years. They had that grand vision, but they started with toll roads, because toll roads are easy to build and highly cash generative. So they had an explicit strategy, doing 2 or 3, taking the cash, because they had no money. So everybody forgets, but China 30 years ago had no money, just like Africa. And they used those proceeds to do other projects. So I'm just using that example to say that really it's time to, I said this morning, my first boss in my career told me the most dangerous thing is to confuse an action plan and action. So I think it's time to move to action. We've talked a lot. We have the 51 projects. One decision we took this morning is to create a business working group supporting by the WEF, bringing in all the private sector people together so we can go from 51 to 3 or 5, and those 3 or 5 will have a chance to happen. Because I don't believe that 51 projects can happen. You start everything somewhere, and we need to now move to action.
Does anybody else on the panel want to address any of those questions, or can I take 1 or 2 more questions?
I just answer one question. I do accept the point. I do agree with the gentleman who spoke about returns on investment. Capital is fluid, and capital will go where the return is best. I think that in Africa we need to accept that we have a lot of latent demand for infrastructure projects. We're miles behind. We're in a catch-up mode. Now, governments will not be able to execute alone on their own without the private sector coming in. Now, if the private sector requires a higher rate of return, we do need to figure out some way of ensuring that we can provide higher returns for investors and build those roads which the Prime Minister has mentioned, the roads, the railway, which could be, for example, like we've seen, where the government actually invests a bit of money from a public sector, which is lower cost of capital, to make the railway now achieve commerciality if the private sector then puts in the capital and then the concession is granted. That way, at least you get the investment off the ground, because we're way behind and we're playing catch up. And to sit only on a public sector model for key things like roads and rails, we would not achieve the ultimate goal. That's just the point I wanted to make on that.
Ahmed?
And I think I wanted to mention one more point, which is the cost of those projects. When we compare private sector-driven infrastructure projects and the time when we deliver, we're much cheaper. When we compare our public sector pipelines to the government sector pipelines, which we do, it's alarming. It's 40%, 50% reduction, and also speed to time, which usually has to do with, one, execution. The private sector is driven by return. Public sector doesn't have the same pressure as the private sector has when it comes to capital, right? And also the pressure of time to deliver so that capital can be returned to those investors. And I think the combination of those two models should realize or provide a much better solution. And the point that the Prime Minister made regarding power in Nigeria is valid. Power is still government controlled, and it's the only thing that doesn't work in Nigeria. Everything else, the private sector works. Okay, and what we figured out is that, and what we figured out in Nigeria, I think that everybody has to have, there's medicine for every particular ailment, every particular patient. The fact remains that the more efficient the private sector delivers. The governments are bureaucratic, they take time, there are a lot of interest, they get involved in things. And with the power sector, the government tried 12 years ago, they awarded $16 billion worth of contracts, public sector procurement. The turbines arrived, sat in the ports for 5 years, didn't get installed because the civil works hadn't been built. Okay, the roads hadn't been built to take the turbines to the location, and the gas pipelines hadn't been built. So you had a situation where you had a move to drive the procurement, public sector, but the nitty-gritty hadn't been delivered. And I think that we do have to, and now we're going back to the original model, which says that let's ensure that we take the existing infrastructure, create a strong regulator, appropriately price these assets, okay, and sell them in a way and manner that the public sector is the regulator and also a co-investor, because the public sector will own the transmission system, but individual generating plants will now be owned and run by the private sector, and the different cities have distribution companies with very, very strong regulation. And I think with that model, we are seeing major progress and things are beginning to happen. And I know in no time we will have the electricity issue sorted out in Nigeria. Thank you.
The amount of inefficiency that exists in our economies as a whole, across Africa, is humongous. Let me give you an example that happened recently in one of our bids in an East African country. To build a power plant, we were 35% lower in costs as opposed to the following bids, and a 40% lower than the local electricity company of that country. Why? Because they were thinking along the paradigm of fuel oil generated electricity. We were willing to build an additional piece of infrastructure, which is a network of natural gas, to bring in the natural gas and be able to take advantage of $4 or $5 per MMBTU of natural gas as compared to $17 per MMBTU for fuel oil. So this is the amount of inefficiency that exists in our system, and we need a combination of private sector and public sector to unlock those inefficiencies and improve the performance in our economies.
Okay, I think, gentlemen, it's 12 o'clock, and unfortunately I'm going to have to close the session. I wish I could take more questions, but I know that a lot of these people on the panel have something else to go to. So unless anybody would like to say something in closing, would you, Brian? I think you look like you're bouncing off your seat.
I think what is coming out of the discussion is that, in fact, the biggest source of inefficiency will be dogma itself. If we were to be dogmatic either way, with respect to private sector or public sector, that will result in efficiencies because both have got failures. But I think that we have to take each situation and assess its merits and decide what is the best decision to make under particular circumstances. Because actually, circumstances will differ even from country to country, from continent to continent. So on this debate of whether public or private for infrastructure, my warning would just be, let's not be dogmatic. Let's find the middle ground.
I just wanted to reinforce what the representative of the railway system in South Africa, I understand, which happens to be public, I understand, just said. And ESCOM is also public enterprise. Now, if the thing we take from this panel is that there are two polar opposites, then we will have missed a golden opportunity. If the thing we take from here is that both the private sector and the public sector have a role to play in infrastructure, and the ultimate purpose of infrastructure investment must be economic transformation. If that's the message we take, then I think it's worthwhile. In some instances, in some countries, in Africa, for example, the border between the private sector and the public sector, which is a host and which is a parasite, is very difficult to differentiate. And dichotomizing this and saying the public sector is efficient and the private sector is parasitic would be wrong. And making the other conclusion, the public sector is always inefficient and the private sector is always efficient, is a myth that has wreaked havoc in this continent.
I agree.
It's a myth, and it's a very dangerous myth. So both sectors have a role to play, and it's a precise definition of their roles that is central to our future. Thank you.
Thank you all very much, gentlemen. You know, we talk about host and parasite, party political interests, dogma, suspicions, myths, realities, and I think it's clear that building relationships from these polar opposites is as challenging as building the roads and the ports and the clinics and the railway lines. So good luck to you.
Thank you very much.
We will.
Thank you.